Hey traders, happy Fun Day Monday. This is Ron Hayden, Market Tamer. Hope you guys had a great start to your week. As always, everything in this presentation is always for educational purposes only. We'll kick off here with SPY. We were up 1% today. It's an inside day. Now, if you think back to last night's video, I talked about could this be a Black Monday, and we would need to see where the market opened. We reversed all those losses. After hours trading, pre-market trading can be very wild, up and down. But we end up opening right around 287.50, and then we end up closing at the highs of the day. There's a little back and forth, but even at the end of the day, it's an inside day. No breakout of this trading range has occurred. If I do this, you can see where are we? Pretty much in the middle. Guess what? Bears still have the edge in the daily chart. Volume was not exactly reassuring. It was only 72 million shares. I'm not so worried about the number itself, but look at the bar. Look at the height of the bar. Does that height overwhelm, stand over the red bars, which are down days? Nope. In fact, it was half the volume that it was on Friday. So nothing's changed despite this 1.11% move up today. Daily chart's still bearish. We are below the red line, which is the 20-day EMA, and we're below the orange, which is the 50-day SMA. We take a look at the Qs. They were up a little better, 1.51%. Again, inside day. This is still tracing out a bear flag. There's the flagpole, and then here's the flag. We got to get back above here for bullish, below here for even more bearish, the next round of selling. But again, daily charts remain bearish. And a similar story here for the Dow Jones ETF, the diamonds. Here's another box they have drawn in. It's just chop suey. Got to wait for that break. All right, and looking at the VIX, dollar sign, VIX. At one point today, I don't know if you guys were able to see it, but the Dow was up, 200 points or whatever it was at one point. The VIX was still up too. It was green. Now the VIX did finish down 2.77%, but we're still above moving averages. So from a technical perspective, bullish VIX is bearish for equities, and that's exactly how the daily charts look. Equities are still bearish. I asked some questions on Trump tweets, etc. I know it's sometimes hard to watch every video each night that I do, but I covered it a little bit ago, and I'm happy to say it again. You have networks on one side that hate him, are going to do anything they can to make it sound worse, which also helps sell advertising. The world is, they're chicken littles. The world's going to end every single day. Then you have the other side that might like him, and they try to make things sound bad too. Regardless of your party affiliation, like him, love him, hate him, whatever, I would strongly urge you to consider trade what you see, not what you think. The market is selling off, whether you like him or hate him. When the market was bullish, like him or hate him, the market was bullish. And right now, when you look across the major indexes, we're having trouble going higher. We're below moving averages. Therefore, the bears get the edge, regardless if you love or hate his policies. So I'm not going to make this a political channel. Maybe one day we'll do a podcast and we'll have some fun that way. But this is just about money, preserving capital, mitigating risk, and doing the best we can. How about Disney? Had some questions on the Mouse House. DIS. Historically, Disney has trouble in the summer. And, summer arrived here at the end of June. There's a little bit of a push up, not much, a couple bucks. Now we're starting to come lower here. Watch 130 purely technical based, and then watch this low, which was 125.5. So let's say 125. Below 130, 125 is the target. Below 125, and the gap fills the target. Disney's publicly traded 40 plus years, which is incredible. There was acquisitions, stock market rallies and crashes, presidents from both sides, wars, debt ceiling issues. It goes on and on. You get the idea. Yet these stocks have these ebbs and flows. Disney's one of them. This is not the time when it typically shines. Doesn't mean that it can't go up. That's not what seasonality is about. Seasonality is just a historical track record saying, hey, this is what's happened in the past. And past performance is no guarantee of future performance. But 40 plus years, and the majority of the time it does not go up in the summer, that's really valuable to know. I can't expect Disney from a probability perspective, if I use seasonality, that it's going to go higher right now. It's not what it typically does. So unless there's something fundamentally that's going to change this time in the summer, the big money typically doesn't care. When does the big money seem to care? The end of October, beginning of November. We've been doing this now for a couple years, and it's pretty amazing what happens. So no, it's no shock that Disney is going lower. How about Facebook? Since earnings, that was the high, also coinciding with the market rolling over. Right now, the downside target's going to be those lows, call it 162.50-ish, down towards 160. But again, you can see how it drops, it pops, it drops, it pops, and now it's dropping again. But that would be your target down here. Before Facebook could become bullish on the daily charts, first thing that needs to happen, get above the red line. That would tell the bears you're losing your grip. And then when it gets above the 50, that shifts even more bullish. Here's a stock I came across, mRNA, Moderna, however you want to say it. Look at the volume in August. While the market was selling off, we're seeing volume come in, but it has not been able to solidly close above the 20 or 50 day until today. And it cleared the little high here, it cleared the high here, and now we're tied with this one over here. At this point, this could be a fun paper trade, as always. 20-day EMA in red could be a potential trailing stop. Don't know what they do, don't really care. It's purely a technical trade. And where would the target be? The last ledge, up in the 20s. Now, I'm not suggesting a stock's going to go up almost double. That's not what I'm saying. But that's where the next line of overhead supply would come in at, serious overhead supply. So keep an eye on that one. How about SPLK? Splunk is starting to go spelunking. This thing is starting to sell off pretty hard. It was at just 130 week ago. Now it's at 112. Watch this 109, 110 area. If we lose that, then maybe this triple bottom or so down at 90 would be the target. But now let's look at the huge volume on earnings. One more reason why protective puts can be lifesavers, especially, when the market's bullish, sometimes stocks' bad reports aren't viewed as that bad. It's going to catch up to them maybe, but it's not the worst thing. But when you have a market that's selling off or in a bearish mode, a cautionary mode, and then you have a bad report, yikes. What's that saying? Katie, bar the door. Things can look pretty ugly. Also, today was bearish engulfing. Also, not a good sign. Volume was above average. Keep it on that 109 area. How about CRE? Wow, you want to talk about getting whacked? Geez, Louise. Below 155, that was the key area, and earnings violated it. It's been straight down. The next target's down here around 40. Maybe 8% lower, about $3 lower, and then down to 35. But if a put was used here, there was no reason to even consider selling that sucker yet. The volume just keeps getting worse over the last 3 days. It's just picking up. So not looking good for CRE. And last but not least, here's Philip Morris. Keep an eye on 75 bucks. The real area to watch is probably closer to 76, but because we had that one spike down on June 19th, about 2 months ago, 75, below 75, and then December lows, 65. That's 10 bucks, 15% lower. It's crazy, but that would be the technical target. And the one thing about Philip Morris, not all the time, but you will see that sometimes these trends, it just runs lower, where something like a 5 or an 8-day EMA could be used as a potential trailing stop. You just fall out of bed, then the rally, it goes right back up. That's why I keep an eye on 75, because there's nothing to stop it. This is just free range. That stock can easily just come boom right back down in a couple days and get there. All right, so that is it. I hope you find these videos helpful. I enjoy doing them. I appreciate your comments and taking the time to watch them. I like to keep life as simple as possible, block out all the noise, and trade what we see, not what we think, and try to preserve that capital instead of getting run over by proverbial turning into the deer on the highway type of situation and wondering what happened. So market is bearish right now on a daily chart. Caution remains warranted. Wish you guys all the best, and I'll see you next time.